This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Well, Ark Invest founder, CEO, and CIO Cathie Wood joined our ETF IQ team to discuss the race for a spot Bitcoin ETF. Here's just a little bit of what she had to say.
In June, when BlackRock announced its filing, or when it was announced that BlackRock had filed for a Bitcoin ETF, the Bitcoin price did shoot up, but has been fairly stable since then. So I do think it's had an impact. A bigger impact this year was the regional bank crisis. It was very interesting to watch Bitcoin go from 19,000 to 30,000 right in the middle of that banking crisis as regional banks were going bankrupt. So it was a flight to safety. So I thought that move was just as interesting.
Hang on, a flight to safety? Is buying Bitcoin somehow a flight to safety? Isn't it a little too volatile for that?
Well, if you think about it, Bitcoin serves as two kinds of hedges. One is a hedge against inflation and outright confiscation of wealth. The other is against counterparty risk. And, when the regional banks started going down, this fear sort of, our memories are fresh with 0809, the counterparty risk became real. And so there was this flight into Bitcoin, a completely decentralized, transparent network, which is not subject to counterparty risk.
Cathie, so you are in this race. Let's talk about the race a little bit. The first important deadline coming up is August 13th, where the Ark filing, the SEC is either going to delay it, which we think they'll probably delay it, and then BlackRock is later. You filed before BlackRock, but BlackRock came in with the surveillance sharing agreement with Coinbase. That was novel, right? Now we're looking in the future. There's talk of a common clock where the SEC could approve a bunch of ETFs at once, putting you on a level playing field with BlackRock and others. What's your take on how this will play out, given you filed earlier?
I think you're probably right that August 13th will come and go. And I think the SEC, if it's going to approve a Bitcoin ETF, will approve more than one at once. So then, again, because most of these essentially will be the same, and it will come down to marketing, communicating the message. We've been putting out our Bitcoin monthly for the last year. We are now starting a Bitcoin brainstorming session. Our first one we launched last Thursday. So we're trying to get the word out there that, our research is deep, and we've been doing it since 2015 when we gained our first exposure to GBTC. Mm-hmm. We were the first public asset manager to gain exposure to Bitcoin at all in 2015.
That's exactly where I want to go. The Grayscale Bitcoin Trust, known by its ticker GBTC. If you look at Ark W, for example, your Ark Next Generation Internet ETF, right now I see GBTC as the third largest holding. If we are in a situation where the SEC does give its blessing for a spot Bitcoin ETF, would you plan to sell out of GBTC and buy one of these physically backed funds?
I cannot talk about what we would and would not do. And in fact, our compliance team is, giving us marching orders not to talk very much about this filing and its aftermath at all. So just the fact that we filed with our partner 21 shares is as far as I can go. I'm sorry, Katie.
Fair enough. No, I was expecting something along those lines. I am curious to get your take on the regulatory temperature right now, because in addition to this rush of spot Bitcoin ETF filings that we've seen, there's also been sort of a race that's unfolding for an Ether futures ETF. There's been a ton of filings to that effect, and not specific to those funds, but do you sense that the mood music around the SEC and what their appetite to allow these products to launch has changed in the last several months?
Well, I think that the two other branches of government, the judicial branch and the legislative branch, are giving the SEC pause because the SEC is losing cases in court having to do with its regulations around crypto. That's the first thing. And there are bills that are making their way through the House and are seeing some bipartisan support.
All right, well, there you have it. That was Ark Invest founder, CEO, and CIO Cathie Wood. She spoke earlier with our ETF IQ team on Bloomberg Television. Now, one such member of that team, Bloomberg Intelligence senior ETF analyst Eric Balchunas, he joins us now to discuss his takeaways from their conversation. So we just got to hear, Eric, about 4 minutes of that interview with Cathie Wood talking about multiple Bitcoin ETFs. There was some stuff she didn't touch on, though, in that clip. Give us big takeaways from your interview this afternoon.
Yeah, I think the first block was on crypto. A couple takeaways. She kind of agreed that probably if the SEC is going to approve, it'll be a bunch at once. So you might have like 3 or 4 out the same day. That's weird because when they approve the futures ETF BITO,
Just
they
one
let
at a
BITO
time.
out first.
Yeah.
And if you're out even by a day, you can get all the volume.
What does that do for flows?
Oh, it's called first mover advantage, and it's big in the ETF space. So I don't think the SEC wants to play kingmaker here. I think they'll probably put about a couple out at once. But Ark is in the main race, so it could be Ark, BlackRock, Fidelity, something like that. She also talked about how Grayscale is probably going to win their case against the SEC. That's kind of another loss the SEC would take, and we think that would further put them into a politically untenable position where they have to approve it. So all this stuff was, I think, bullish. Also, she talked about Coinbase being the most compliant of the exchanges. That's also good for spot Bitcoin ETF approval hopes because that's the exchange that all of them are connected to in the filings. And so I think the idea is if Coinbase can be seen by the SEC as willing to play ball a little bit, share information, they'll feel more comfortable approving the spot ETFs. That's been the hang up the whole time. But obviously we had other segments on single stocks and geography. I'm not sure if you want to get into those, but that's the crypto takeaway.
What's the timetable for as far as when this could be approved for this spot Bitcoin ETF?
Yeah, so James and I have a 65% chance of approval this year. We think that October, November, December obviously are the likely times. The Grayscale suit, which we could get a ruling on in the next month, that could fast track the timetable. There's a lot of unknowns here, but I do know we give a higher percentage chance that they're going to approve Ether futures. But they had originally said they're not doing that. There's been like 5 different attempts to get one of these, and they always told people to withdraw. Well, now they're not. We have good information that they're actually going to let Ether futures come out. So that's a policy shift there. So again, if they let the Ether futures out, they come out October. So maybe we're looking November, December. Again, we still have a 35% chance it doesn't happen. So this is like basically not a done deal at all. But I think the winds are shifting. You can feel it. There's a bunch of little details on why, but that's our take.
Okay, single stocks. What did she say?
Yeah, we asked her about Tesla and the new CFO, or the CFO leaving. She was okay with that.
Yeah, Zach Kirkhorn's been there for 13 years. I want to say he's like a really young guy because he's younger than I am. But he's been there for 13 years, so I don't know how young I am anymore.
That also seems like that's a long time for Tesla. How old is that company?
Right.
I think it was like his job out of business school.
Also, she was selling Roku recently, too.
Yeah, well, the Roku, it's weird. In Cathie's portfolio, she tries to maintain weights. So sometimes if a stock goes on a run, she will sell some to maintain the 9% weighting or whatever, and it looks like she's selling one of her favorite names. But I try to look at the percentages. And Roku, she's actually increased percentage over the past year. So I would say she's bullish Roku, bullish Coinbase. That percentage has gone up. Sometimes with Cathie, you got to know she's always trying to keep these weights in line, and so she can sell when winners.
Right.
And it looks like she's bearish, but she's just keeping the weight. We also asked her about more Tesla. Somehow the Elon Musk and Mark Zuckerberg fight came up.
Somehow it came up.
Her.
Who's her money on?
I didn't see. She kind of sidestepped that, but she said I think she could tell she hopes Elon doesn't like hurt himself because he's got to run all these companies, and so he got a neck problem, and she's just like, I hope he takes care of himself.
This has got to not happen. This can't happen. This is ridiculous.
So my theory is the whole thing is to do it on X or Twitter. And that's what he's really trying to do. This is all to get attention and eyeballs.
Simulcasted on Threads,
too?
I
think he... Well, maybe. If so, that would be fair. But if it's only on X, I would say Elon Musk won the real fight.
Right. Well, Eric Balchunas, so great to meet you finally in person in the Bloomberg
Can't believe you guys didn't actually know each other. Just bringing people together here.
Right. ETF analyst at Bloomberg Intelligence. Such a pleasure meeting you in person when you do all things for Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Jess, my question for you is, have you heard of live shopping? I already asked you this.
Well, so I hadn't before, and then I started looking things up, and then I knew. I was like, I know exactly what this is. I just didn't know all about it.
Well, what's crazy is Amazon has like added it to their app.
Right.
So if you there's this redesign of the Amazon app that happened at some point recently. So if you click on like this little ideas thing, it turns into this sort of like Instagram stories of shopping thing.
It does.
Have you seen that?
Friends that actually use that. And so now I almost feel like, do I need to jump on this bandwagon?
Okay, well, we've got a great guest to talk all about this. Maryam Ghahremani is joining us. She's the CEO of Bambuser. It is a company that creates a shoppable video and live shopping shows for retailers. Good to have you with us, Mary. How are you?
I'm good, thank you. Happy to be here with you guys.
Well, I'm really happy to have you here. As I was doing prep for this interview with you, I was looking for statistics about live shopping, and it's pretty incredible to see. I mean, I heard of it. I first heard of it through like stories about China because the way it blew up in China during the pandemic. Yes. According to Insider Intelligence, nearly 20% of retail e-commerce in China will be live stream commerce, with total sales rising to more than 840 billion in 2025. That's a huge number. And then Klarna, Klarna says that only 20% of shoppers in the U.S. have actually said they've done live commerce, but 34% say they hadn't participated, but they've heard of it. What are you seeing on your platform?
So, I mean, we are lagging quite a lot, I would say, looking to China. So it took almost 5 years, for this new channel to become really, it has really transformed the retail industry in China, and it has established itself as, a major sales channel. But it took them 5 years. And just to go back to that, I mean, China is the world's largest e-commerce market by far. So I would say that we see somewhat a similar adoption, trend in the US and Europe, but with a lag, what I would say approximately 5 years, right? So it's really early days for the Western world and live shopping or video commerce, as we like to frame it. So, I mean, it's a huge market, it's growing, but of course the adoption is not where it is in China.
I have to call out the retailers and companies that you are working with, one of them being QVC, which my mom has shopped at for decades. Yeah. So I should probably ask her. She's probably using this type of technology too.
But you raise a good point, Jess. Like, this is the new QVC, right?
Yes, definitely. And so other companies like Bloomingdale's, Dick's Sporting Goods, Adidas, Clinique, talk to us about how this works.
So I would say, it is a very different experience to if you would experience live shopping on Tmall in China. So I would say the Western approach to video commerce or live shopping is much more educational. It's much more driven by education and really, connecting with the end consumer to create a platform to, have a better discovery phase, increase conversion, build a stronger customer relation and reduce returns. If I look to China, it's very driven by promotions, right? It's very promotion driven and very heavy on just pushing the consumer to shop. So looking at our customer base, I mean, we work with a lot of Fortune 500 companies, a lot of them you mentioned, and they are much more, so they've tapped into our platform and is using Bambuser technology to really, add something that is more likely to look like something you would do on social, what you started talking about, rather than just adding a video to their website to just sell something, right? So it's much more about adding a layer on top of the very static shopping experience rather than just pushing promotion and making, the end consumers buy something. So I always say in the Western world, you give something to the consumer, you give something to them, and then you ask them to buy. In China, you just ask them to buy. If you understand the comparison between really how it's working outside of China.
Well, I feel like, the thing that, and correct me if I'm wrong, Mary, and I'm interested to see what you see on the platform, but the way that at least I shop online is I know what I want and then I go and I search for it and I find it. And
I'm
then
the
I buy
same
it.
way.
It's not like you go and browse, right?
No, I usually go exactly and I'll compare it to different places, buy what's the cheapest one.
Yeah, exactly. So you're shopping based on price, but you
Yes.
go into it knowing that
Right.
this is what you want. Mary, how do you change that experience? So going online to shop is less about what Jess and I do, and more about like you're walking down Fifth Avenue and you see something that catches your interest, and then go in a store.
I would say it's a combination. So I would say it's where product discovery and purchase happens in a single journey. That does make sense for you guys. So what we do with adding a video layer on top of an e-commerce experience is that we really help the brands to bridge the offline and the online experience, right? So I can give you a great example. So LVMH is one of our, customers. We work with many of the Maisons, and we just added, so Dior is using our one-to-one solution to do consultations. So instead of you guys going to Saks Fifth Avenue and going to the Dior counter and buying something, you could actually book that experience through Bambuser platform. It would be, of course, we're a native platform, so you would never see Bambuser. It would be a Dior, player, just like the conversation we're having now on Zoom, right? So it would be a player where you have a lot of interactivity, where you can compare products, you can help the customer to add to cart, and then you will go to the checkout, right? So it's really enriching the customer experience and helping them. And then, we in our one-to-one solution, for example, with Dior, we actually have a virtual try-on. So I could actually try on the lipstick I want to buy and see how that looks on me before I add it to cart. So it's really adding the journeys that you guys talked about, but combining them in one single journey.
We only have about 30 seconds left, but based on what you're seeing, do you think the economy is headed for a recession on those shopping trends you're viewing?
Good question.
I would say, we're seeing a slowdown in retail overall. It's because of the macro and how the economy looks. I would say we're seeing that, we're live in most countries and work across a lot of multiple markets. I would say what we see as trends is really, going more towards a sustainable way of shopping and really helping the consumers to make better purchase decisions by adding, different type of technologies, ours being one of them.
Mary, gonna have to leave it there. Thank you so much for joining us this afternoon. Maryam Ghahremani is CEO of the online shopping platform, live shopping platform, Bambuser, joining us this evening from Italy.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, a lot of big professional moves coming today. Jeff Currie, the prominent commodities analyst known for making bold and often bullish pronouncements, is leaving Goldman Sachs Group after 27 years. And UBS revamping the leadership of its investment banking division as the lender presses ahead with its integration of former rival Credit Suisse. Joining us now to tell us about all these big people moves is Bloomberg senior finance reporter Sri Natarajan. Sri, good to see you. Good to have you with us. I got to tell you, I go to your bio page on the Bloomberg terminal and I see the Goldman Commodities Research Chief Jeff Currie set to leave story. I see B of A Wealth Chief Risk Officer leaving story. I see Goldman's Lisa Opoku joining a recent spate of partner departures. I see Goldman Investment Chief exits after changes Royal Key Unit. Like Jess said, I'm starting to see a pattern here with Goldman Sachs in a lot of these stories. What's going on?
Well, can I say covering Wall Street is all about people and capital, right?
Yeah.
So
Right, there you go.
You follow the money and you follow the people.
But is the door revolving like this all the time?
I would say that, when we look at all the names that have been reported in the last couple of weeks, this is the sixth partner exit out of Goldman. Late July, early August is not the time when we see a pickup in these names, so that has been a bit of a surprise.
Do we know why? Like what the catalyst is?
Different reasons. You can't fit them all under one umbrella. There have been a number of people like Julian Salisbury. Those were people on the rise inside Goldman. Those were handpicked by the CEO for better, bigger roles. And they suddenly leave. It's quite interesting. On the other hand, you have people like Jeff Currie, who's been there nearly 30 years, who's done all that you need to do in that space, who is the de facto celebrity in the world of commodity analysts, right? That's the most recognizable name. He's the most recognizable brand out there. So you can't really tack him on to some of the other departures. But it is a serious brand name inside Goldman, and his departure will have an impact on their franchise.
And tell us about who's taking his place.
You sometimes appreciate the value of a person when you realize that he's being replaced not by one person but by three people. What Goldman's
And that's
done.
what stuck out to me. There's 3 or 4 different names on there.
It's also entirely possible Goldman just doesn't want a broad head of commodities research anymore, and that's why they have someone who runs their oils research business, their natural gas research, their metals research. Now, Goldman and commodities, it's a storied franchise, it's a storied name. It's been a name everyone in the market looks at. Pre-crisis, Goldman Sachs and Morgan Stanley used to be known as the Wall Street refiners, just because of sort of the physical and financial trading they used to do. The structure and the shape of that business has changed a lot, but commodities is still a big engine, a big driver of the Goldman trading machine, which, by the way, is pretty damn good on Wall Street, and it is one of the best out there. So anytime you hear from the research folks at Goldman, they may not always be right, but people certainly want to pay attention.
Where's he going? Do we know?
As of now, it looks like he's not taking on any other job immediately. He's spending some time with family, has 2 young kids. So, after almost 30 years in a high-pressure job where everyone's paying attention to everything you say, maybe it is well-deserved rest for him.
Hear, hear.
I have to agree with that one. I wanted to switch it over and just talk about the UBS revamp in leadership, because while Tim was away, we did have that shakeup when it came to the regional banks, but then also
I heard about that crisis when I was out.
But then also not just the smaller banks. You did have this banking giant UBS that did buy its troubled rival Credit Suisse. So when I'm seeing these leadership changes at UBS, how much of this is playing it into it and really impacted because of what had happened within Credit Suisse?
Oh, it's all about that, right? Now you've made this big decision. Switzerland, the banking landscape in Switzerland has been altered dramatically when you have this combination of UBS and Credit Suisse. Now what's important is to make sure that the merger goes smoothly, make sure that they're able to execute on the integration, because a lot hinges on that. And part of that, when you have this gigantic memo that names 40 different people into various leadership positions, it obviously forces a lot of homework on people just to get their arms around what all the changes are. But in some ways, is also UBS reiterating what their focus areas are, what their interest areas are. And you have about a dozen or so Credit Suisse investment bankers also getting roles, which is to say, not everyone who's in investment banking at Credit Suisse would be undesirable at UBS. They certainly want to keep the cream of the crop.
Shri, I'm thinking back to the conversations that we've had with you over the last 2 or 3 years. And if we kind of think about them in terms of themes, we can think about, the talent the talent wars of 2020 and 2021. We can think about burnout, and we can think about over the last couple of years on Wall Street, people going to crypto firms or going to join private equity firms, in some cases joining tech firms. Where's the pull coming from today?
2021, what a time to be alive, when all the analysts could go out there and say, hey, we might be the junior most people, but you better pay us a lot of money.
Look at our slide. Look at this PowerPoint deck that we created.
Exactly.
Yeah.
Now, right now, it's all about please let us stay in our jobs.
How the tables have turned.
There are absolutely a lot of opportunities out there, right?
Still today?
But the difference being, if 2 years ago, almost anyone could find a role because everyone was all hands on deck. There were so many deals happening, so many transactions happening. You needed to put bodies to work. Now the opportunities are more geared towards the top performers, those who are doing really well, those who are absolutely desired. It is not that you just show up, put your hand up and say, I want a job, you will get one. And I think that's the big difference. So you will probably still see headlines of talented names and brand names going elsewhere, but it's more about who they are than what seat they're taking on.
I feel like this is the Hunger Games, right? Especially when you think about how competitive that type of environment is. What anecdotally do you hear whenever you speak to your sources, especially if there's maybe people earlier in their careers that are trying to get to that point?
All of this goes through in a cycle. I still vividly remember about 2 years ago, we spoke to the former CEO of Goldman Sachs, Lloyd Blankfein. And he was, he made a very pointed reference at that time, because remember, a lot of the junior banker agitation got a lot of attention because of what happened inside Goldman Sachs, the PowerPoint deck that Tim was talking about. And Blankfein was very clear back then that all these things go in a cycle. And, you might feel like you have the upper hand right now, but that will not always be the case. And he was right. The cycle has turned. It has become harder. A lot more people are sitting around twiddling their thumbs because deal activity has completely fallen off a cliff, which is why I go back to the earlier point I made, is now you really need to stand out. Just because you showed up and have a role does not mean you are immediately wanted in all corners inside the bank, outside the bank, outside your firm. You really have to be able to stand out to be wanted now.
What's the projection look like?
We've been talking about green shoots out there, right? We've been talking about a pickup in activity. The first 7 months of the year, investment banking, the deal environment was sluggish. But the challenge with talking about green shoots right now is we're already in the second week of August. You're heading into the summer doldrums, so you're not going to see a ton of deals in the rest of August. September, post-Labor Day, as New York gets off its post-US Open tennis high, you're hoping that there will be people out there willing to do deals again.
You read my mind. My last question to you is about tennis.
But let me point out one important thing, though. You have the possibility of a government shutdown again. You have the sort of Washington games being played again, and that deadline is October 1. That could throw a spanner in the works for September. And if that's actually something that drags on, let's hope it does not. But if that becomes a bit of an issue, then you're again heading towards year-end, and unfortunately 2023 might be a wash, just like 2022. Okay,
30 seconds we have to talk about what's going to happen at the U.S. Open this year. This is your favorite month because it's the beginning of the U.S. Open and you spend a lot of time there. We'll be there for Bloomberg Radio. What do you think for the finals this year on the men's side? An Alcaraz-Djokovic final?
Oh, that would be delightful, wouldn't it?
Yeah.
You already saw what the two of them can bring into consecutive Grand Slams now. The French Open sadly curtailed a little bit because of injury, and definitely the epic at Wimbledon. And we saw the exploits of Alcaraz in New York. He certainly won a lot of fans in the city. So if this city can get an Alcaraz-Djokovic final, we'll take that, even if we've never gotten a Federer-Nadal.
I'd like to see Tiafoe in there as well. He's such a crowd pleaser. On the women's side, Jessica Pegula would be awesome too.
Nice.
Rooting for the American from Buffalo. That would be very cool. Shri Natarajan, good to have you with us.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, it's hard to believe it's about that time. We're just shy of 18 minutes away from the close of equity trading here on this Monday afternoon. And what a Monday it is. The Dow Jones Industrial Average higher by more than 1%. The S&P 500 higher by close to 0.8%. The NASDAQ moving higher by more than 0.4%. For some commentary, not just on today's trade, but on the macroeconomic environment and really how he's deploying clients' money. Let's turn now to Dave Donabedian, Chief Investment Officer at CIBC Private Wealth Management. Dave, good to have you back with us. How are you?
I'm good, Tim. How are you?
Yeah, we're doing pretty well, thanks. Having a good summer, thank you. The U.S. equity market certainly having a good 6 months. How do things feel to you right now, sentiment-wise?
It's interesting. I think the first 5 months of the year obviously were tremendous in the sense that if you look at the 5-month returns on the S&P, phenomenal start to the year. But as we know, it was driven by that handful of stocks that had moonshots. And had that environment continued, I would have been concerned about an outright bubble developing in the market because it was so unbalanced. I'm interested and I think pleased to see that in the last 2 months, it's been different. A lot of those moonshot stocks have slowed down. Some of them have corrected a little bit. And if you look over the last couple of months, the equal weighted S&P has actually done better than the market cap weighted version, indicative of more sort of balance in the market. So to me, the kind of the technicals feel better today than they did, say, back in April or May.
And you bring up the last 2 months, especially with the equal weighted index for the S&P 500, but also more cyclically oriented sectors in the market like industrials, materials, picking up some speed here. What's your view as far as your second half outlook after we saw such outperformance in the first half by tech and growth stocks?
Yeah, again, I think we'll see more balance in terms of relative performance. But the other thing I think we'll see is we'll see a market that frankly is more challenged and halting, and maybe even have a somewhat of a pullback and correction here sometime in the next few months. And that's simply because while many have thrown overboard the idea that there's a risk of recession, I unfortunately think there still is, and in the short term anyway, that'll be a potential source of a stumble by the market, because of course it would call into question earnings.
Talk more about that, Dave. What is giving you the notion that we're not out of the woods yet?
Yeah, I mean, a lot of the data that investors have taken comfort from lately, retail sales, last quarter's GDP, employment, and so forth, are absolutely solid. The problem is they're coincident indicators. They tell you what happened today or what happened in the recent past. They have no predictive value. They don't tell you anything about the future. And when we look at the things that are more leading indicators, most of them are kind of troubling. The most obvious is the intensely and persistently inverted yield curve, number one. The index of leading economic indicators, which can give off all kinds of false positives, but not at extreme readings, and it's at an extreme reading. And just the general idea, we know that the Fed has raised rates more than 500 basis points in call it a 16-month period. We've not begun to feel even the minimal effects of that. That lies ahead. The sort of anti-growth impact of tight money lies ahead. So the leading indicators say there's still something to be concerned about with the economy.
In other words, the long and variable lag of higher interest rates has not been felt?
Only a little bit. There's more to come.
Like what percentage have been felt in your estimation?
Oh, I don't know, a quarter maybe.
Okay.
So then how are you positioning? What are you buying? What are you selling?
Yeah, generally, recently I'd say we've been doing more sort of trimming and adding to portfolios. We've been trimming, some of the high flyers that have done extraordinarily well earlier in the year and are now at higher valuation levels. And we've been adding to the things that are unloved but inexpensive in the markets, things like healthcare, utilities, REITs.
So more defensive corners of the market.
Somewhat more defensive, but we think of them. We're more interested in the valuation than the defensive characteristics, if you will.
So then, if we do see a pullback 5-10%, what are you buying?
Well, it'll depend where the pullback is and where the are. I mean, it's a lot of the names that soared in the first 5 months of the year. It's not that we don't like those names. In fact, we own some of them. It's the price you pay for them. If we have a correction that focuses on a lot of those higher growth names, and they have meaningful pullbacks, we'll be buyers there of the higher quality names at a more appropriate price.
If a client comes to you with a lot of new money, how are you deploying it?
We're deploying it, slowly on the equity side. It's important when you're allocating money not to make all or nothing bets. Don't say, we're not going to invest in anything because we know there's a correction around the corner. You can wait forever for that to happen. At the same time, you don't throw it all into the market. So we've been counseling patience, putting money to work slowly over the weeks and months, with an emphasis on stocks that have dividend growth potential, high quality names, and there'll be a place in a growth-oriented investor's portfolio for growth-oriented stocks, but only at the right price, and a lot of them aren't there right now.
What's the top question you hear from clients?
It's probably still about the Fed. What are they going to do next? I would say that's it. That's been pretty much the case for the last year. Our view there is that they're done raising rates. They're still going to talk as if they might, but we think they're done. And again, that's consistent with our forecast that core inflation is going to come down quite a bit in the next 6 months, and the risk of recession is fairly
So they're more
high.
optimistic about inflation.
Yeah. Dave, real quick, we only have 30 seconds left. If they're done raising rates, how long do they hold them here?
Well, the futures markets tell you they don't cut rates until March, and then do it have an accelerated number of cuts later next year. Because of our economic outlook, I think that first cut will come before March.
All right,
Maybe
first cut before March. All right, we're going to have you back on before then, see if you've updated your call at all. Really appreciate you joining us this afternoon. Dave Donabedian, Chief Investment Officer at CIBC Private Wealth Management.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.